In this video, I wanted to answer one of the questions I got in the comments, and it was asking me, they bought Doge pretty high and they wanted to know how they can lower their average. And I think there's a couple things you can do. So one, you could either hold it and just wait for it to come back up. I don't know how long that's going to take or what. But I think what he's talking about is he wants to trade it. So what I wouldn't want to do though is get these coins up here that I bought up here and short them down here. I would not want to sell them down here. What I'd rather do is buy more down here and try to dollar cost average and try to wait for a big pump. If it comes up to like another resistance, maybe try to take profits there, and or if it starts heading back down, then take profits. That's kind of my strategy. I'll look for openings to do a position in, and then I won't use all of my money. I'll do risk tolerance. So what I'll do is do a small portion. If it keeps going up, I'll look for other opportunities for that it keeps going up, and I'll put another dollar cost average in there. Keep looking for those opportunities as long as it keeps going up. Once it starts heading down, or once I think it starts heading down, then I'll take out some of these positions down here. I keep all my positions separate on a spreadsheet, so I know this position's right here, this position's right here, this position's right here. If the price starts going up and we start trending down, then I know I can take these positions right here. Let's say I bought one right here. I won't take out this position. I'll just let it ride, and then I'll take out these ones and pull the profits on those ones. Then what I do with those profits is I'll either send them to cold storage, or I'll just send them back to my trading account and keep trading with them. But that's one way to dollar cost average down. In general, buying down here is going to lower your average. I think another option that you can do is you can send coins to Gemini, and you can send them to the Gemini Earn and stake them. So right now, Dogecoin, they offer 3.7 APY. So that's where I have some of my coins staking right now as well. I'm pretty much in a similar boat. I was buying on the way down here. I was also buying on the way up here too. So I was buying up here and then taking profits when it started swinging down. Buying up here, started taking profits when it started swinging down. But I was trading up and down, and I did get caught with some positions on the way down. So that's basically what those orders are in that Gemini position right over here. These are coins that I just still have lying around from these positions right here. I probably could have made more money if I would have just bought down here with all that money and just kept holding it all the way up here and sold it, but it's really hard to tell the tops. That's exactly why I do this strategy of dollar cost averaging. When it starts trending down, then you pull some profits. If it keeps heading up, then we could keep dollar cost averaging, pull profits, and you try to take out your initial investment and put it into something else that you like better. For me, in general, for Dogecoin compared to Bitcoin, I like Bitcoin better. So what I was doing is sometimes, like I was saying, when I would pull profits, I would actually put them directly into Bitcoin. So that also brings me to another point. We don't want to be probably buying stuff that we don't want to be accumulating or dollar cost averaging more of. That's my opinion. So for me, my biggest holding is Bitcoin, because that's probably what I have the most conviction in. And then next is Ethereum. And I bought Bitcoin down here as kind of just like a joke, just a little bit. And it just grew so much that it actually became a decent, not a decent amount of my portfolio, but a nice little chunk. So yeah, I like Dogecoin still. I've been dollar cost averaging a little bit down here. I actually had some positions down here. I took some profits up here, and I've put in a little bit of position. I mean, I go in and out all the time. So like I said, I have a spreadsheet. All right, so this is my spreadsheet. What I do is I have the date that I bought the coin. Sometimes I don't fill it in, and sometimes I don't fill in date. But then the next row over is how much coins I bought, and then the price that I bought them for, and how much I paid for them. All these coins right here are staked on Gemini. And then the other thing what I do is in this column over here, this is what I sold it for. So when I take profits, I'll do like something like this. I'll come over to this row, and let's say I made 30 on there. That's what I sold it for. And then I'll bring this over here, move this over here, and then I'll do a function and I'll add these two together, which brings me my profit. After that, I come up here and I do a function and I add this whole column together, and that gives me my total profit. Over here, what I do is sometimes when I want to use some of this profit and keep some of this Dogecoin in like a hardware wallet or something, I'll take one of these positions over here and I'll just cut and paste it over in this row. And then what I'll do with this amount of coins is I'll send it to my hardware wallet. What I'm trying to get to though is my positions are separate. So I keep track of all my positions, and all my positions are separate. So when we start trending down, like I was talking about, like let's come back to this side over here. I was buying all the way up here. I was buying. Same with up here. Buying. When it started trending down, I took these profits. When it started trending down over here, I took these profits. As we were coming down, I did not mind accumulating more, so I looked for previous support levels. And I bought on the way down as well. What you want to do is have the same conviction on these good ways up, all the way on the way down too. And you got to be ready for these little bear markets that we go through. It seems like this guy is still doing good in the bear market, in this little bear market, because he still looks, it seems like he's still holding on through all this. So with that, you actually get kind of like tougher skin by going through these bear markets, and because let me show you where I started to buy Bitcoin. And you can see all my positions on Bitcoin right here. But I also have a bunch of positions all over the board. But let me show you where I actually started to buy Bitcoin. I think it was somewhere in this area right here. It was either in this area or maybe in this area. And right after I bought Bitcoin, it took a huge dump, and that's when we entered that big bear market. We came down and pretty much hit our lows that we haven't seen ever since. I didn't ever sell Bitcoin to try to, actually sometimes I did. Sometimes I tried to sell it to try to do what you're talking about, to try to make profits. But I think the smarter thing, what I should have really done, is just had that same conviction, and really the same conviction, the reason that I bought it over here. I should have been buying it in these spots over here. And now when we look back on this, because this was around 2017, 2018, I think it was, 2018. Now when we look back on this, this looks like probably the best time we could have ever bought Bitcoin, at least in the past few years. So I guess my point is you want to have you want to buy stuff that you have conviction in and that you think is going to go like this in the long run. I was really shocked how fast we went up. I thought we were going to go to $1 too. I mean, we were really close to $1. We weren't that far off. $1 was only right here. I remember when my brother was asking me if we could go to $1 down here, and I was like, I don't know, dude. We have a very, very far way to go. But look how much we grew in the past year, guys. It went really hardcore. So, I mean, it doesn't surprise me that we had to cool off for a while, and now we're just kind of chilling out. I'm not sure what's going on with the crypto market, if we're going lower or if we're going to get a big, huge run up and hit that dollar this year, or we're going to have to wait another 4 years to go kind of down and then kind of get that next bull run or whatever. But I still have my Dogecoin, like I was showing you. I have some in Gemini staking, and then I also have some on my Ledger wallet. So yeah, I'm planning on holding it for a long time. I really like the way that it ran up really hardcore. Like I said though, Bitcoin is my number one holding, and then Ethereum is number 2. Maybe Dogecoin is number 3, but I also like Polkadot and ADA, and those ones are coming in right at number 3 too. So this isn't financial advice to go buy Dogecoin right now or anything like that. I think that, I mean, it could go lower, it could go higher. In general, I'm here for the long run on Dogecoin. I put it on my Ledger wallet, so I'm not going to touch that for another 10, 20 years. I'm just going to let it sit there. Like I was saying, a lot of this is profits, and we started buying down here when Elon started tweeting about it. So I'm kind of just watching Dogecoin do its thing. I still have some on Robinhood too, and I'm waiting for those crypto wallets to come out so I can so I could actually move that Dogecoin to either Gemini or my hardware wallet, so I can actually hold those coins. I don't really like that they're kind of stuck on Robinhood right now and I can't really move them. That's the other thing though. Hopefully you're not on Robinhood, and you can, if you want to put some on Gemini, that's an option. But yeah, I wouldn't really recommend shorting these coins that you have up here unless you just want to get completely out and forget about it and put it into something better like Bitcoin or Ethereum. I don't know, just something better that you like better pretty much. So this applies to this applies to other coins too. The cool thing about crypto is you can stake your coins. So like you can stake your coins on Gemini, Kraken, BlockFi, and I'm kind of playing around with staking on the ADA wallet too. So that's pretty interesting as well. I feel like the staking has is a little more risky because you're lending out your crypto to be lent out to give you money. Whereas with the cold storage, you just have that securely. You're basically your own bank. In my next video, I think I'm going to talk about I think I'm going to talk more about staking, the hardware wallet, and trading, and how I allocate my money when I'm putting my money into crypto. And basically how I kind of want to balance my portfolio between trading, cold storage, and staking. So if you're interested in that topic, click this video right here and we'll get into it right now. If you guys like this video, hit that thumbs up button, and if you like it and find it helpful, maybe hit subscribe. I'll see you guys in the next one.